Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, I'm going to show you how the stock market is now more overbought than 85% of the trading this year, so stay tuned. All right, quick look here at the New York Composite. The New York Composite basically was unchanged for the day. The candles on here for yesterday and Wednesday looked almost identical, very compressed, little doji bars. That's indecision type pause. And when you look at this, 1, 2, 3, 4, you could maybe even count this, but at least 4 out of 6 days of the last 6 days have been very tight little doji type of candles. When we look at it on a weekly basis, a similar type little candle that's in here, doji candle, and it's inside, definitely an inside bar. It's a lot more compressed than definitely the last 2 weeks and several weeks now, actually, in terms of the range. But it's, you know, a holiday shortened abbreviated week. Now, this is still fighting strong downward pressure. Here's the 21-week moving average here. The blue is the 10. This is the 55. They're all still aligned to the downside. This looks counter-trendish to me in terms of the way it's acting. What I want to do now is look at the McClellan Oscillator real quick. I have that on the New York Composite. The McClellan Oscillator is now telling us we've got a reading of 83.9, basically 89. So right now, so I put a line across the top there. And what I did was I went back and looked at this and said, okay, how much time, if you look at, here's the beginning of the year right here. Let me get my crosshairs. This is January. This is the start of January right here. So how much time has it been above this line, the reading where we're at today? And I counted up the number of days. And it was 32 trading days were higher than the current reading we have now. Of all the trading that's gone on this year, that's about 15%. So that tells me that we are now at a point where, you know, we are higher than 85% of the trading this year. So we're now in this overbought region. We are higher than it did in August when it launched the move to the downside in August. So we've now gotten overbought. When I look at this, we can get rid of that line because that can get confusing. Here's the zero line. I think of 50 to minus 50 as kind of a neutral zone, 50 to 150 as definitely overbought. And when you get over 150, it's extremely overbought, and vice versa down here to the downside. So that's the situation in terms of a quick look at the technicals there. Let's take a look at gold and oil. Let's grab, we can grab gold. Right now, gold took a hit yesterday, and for the week is down, GLD is down 1.84. This is really pressing down. This is an ending diagonal. This is a support zone I've got from way back when. Let me see if I can zoom out. You can see I created it from the peaks here and created a little support zone, and I think there's a real good chance that support will come in that zone. That's really what 99 to 100 basically right in here. So that's what I'm looking for on GLD. We take a look at oil, and here's USO is the ETF for oil. The bears have been controlled the last 4 weeks. Last 2 weeks have been kind of doji type candles, but if you look at it, you can see that, you know, the bulls tried to rally, the bears took over. The bulls tried to rally, the bears shut it down. And so the selling continues to be in place over these last several weeks, and would not be surprised to see it take out this low right here from August 28th low. All right, that's oil, gold. Let's take a look at the 3 Chinese stocks we've got. Let's start off with Baidu. Baidu is the Google of China. Okay, here's all the trading I got on this from 2005. Looks like 5 major primary waves up to me. It's broken this long-term trend line. So right now, I think that this stock is in corrective mode, corrective action. This could be like a first leg down. I don't have a specific wave count on it. When it gets into corrective type stuff, it can get very messy. This looks like an ABC back up counter trend type of move. We've got a trend line here. Let me zoom out a little bit. This is running into resistance. The high here on the 19th was 210.90. If you look at the peaks in here, the high 210, the high here at 214.22 and the high over here at basically call it almost 224. So this is going to start running. If it continues to push through here, which I've got even my doubts, we're starting to run into bearish divergence on the indicators. Yeah, the RSI, matter of fact, all three of them were showing bearish divergence with this move in here. So I wouldn't be surprised to see this thing start to roll over, and I'll be watching to see if it breaks down and breaks this trend line, short-term trend line here, or intermediate, I guess I'd call it, several months. All right, let's take a look at DANG, e-commerce DANG, which is a business-to-consumer type website. I think it's almost like an Amazon, I believe. China DANG, what a name. All right, so the low right here is from 2012, and look to me like 5 waves up. This is way below underwater from its IPO days back up here at 2380 low on the IPO day. And now we've got this corrective action. I think it's very complex. It's combining several zigzags to me is what it looks like. This looks like we're in the middle of another zigzag. And what I'm watching right now is to see, does this start to roll over and break this short-term trend line here, and or does it develop into something else? But that's, to me, based on the wave count and the way this thing is structured, that's the way it looks to me. So I'm not sure this thing is ready to go yet. And then the last one we'll take a look at is 58.com right here, and that's the ticker symbol WUBA. All right, so this is all the trading on it, and it is well above its IPO days. And you could see it went public back here in the low 20s and hit as high as into the 80s. We're now at 58.10. It looks like it's trying to make a run in here. It looks like a nice little 5-wave sequence pushing higher. I'm not sure what else other than I looked at some of this. We've got a resistance point that's going to run into right here at 60.45. We've got a short-term gap and may make a run to try to fill, and then it's going to hit some more resistance right up in here. So this is going to be really interesting to watch. It looks like short-term and intermediate term, this thing is trying to pull up. The long-term, we've got the 55 below the 233, at least at this point. So this could be interesting to see. I don't see another, I mean, other than drawing a little trend line in here, right here, I don't see another one just off the top of my head. So, I mean, this, it looks like that's what it's trying to do, make a turn and run. We'll see how far it can get through this resistance right up in here. All right, that's it for this weekend. Hope you found that helpful. If you can think of one person who would benefit from this video, share the video with that person. Thanks for watching. Have a great weekend.